If you look at a country the size of the UK, where we are today, and the number of international companies that are UK-based, you can count on one hand, you can count British Petroleum, you can count maybe Rolls-Royce making the airline engines. But if you look at a country like Sweden with a population of 9 million, a pipsqueak compared to the UK in terms of its population size, but then you look at the amount of manufacturing that is coming out and the names that are global, like Husqvarna, the largest maker of chainsaws, Electrolux, the largest maker of white goods in the world, Scania, the largest truck maker, SKF, the largest ball bearing maker, SCA, the largest paper product, H&M, and so you have this enormous amount. Ericsson, the largest telecommunications provider. It's quite an impressive, IKEA, etc. It's quite an impressive list that comes out. But the reason why I point this out is the next question would be great, but they're not actually manufacturing in Sweden. Well, that's not actually true. They are. So Volvo, for example, Volvo, the car company, is owned by Geely, the Chinese group, but Volvo Penta is the largest marine engine maker in the world. Scania, the truck maker, a lot of those, and same with Electrolux, a lot of the goods are actually manufactured in Sweden. And those towns, if you take Husqvarna, Husqvarna is a town. It's named after the town. So you have quite an interesting setup in Sweden where you have all of these manufacturing groups that are split around Sweden, which creates for a fantastic investment market from a real estate perspective, and quite a stable situation. And of course, with the currency, talking about the currency going down with the Swedish krona, that's obviously a benefit for these large manufacturing groups who are selling in euro.
In terms of pricing on real estate, whether that's good or bad, I don't know, but we've cut the interest rates quite recently, went into negative territory in Sweden. I think that the big bet now is whether that is sufficient to get inflation going or not. Some say yes and some say no. If it's a no, then we'll see, supposedly another cut in interest rates. I think that'll all help sort of the multiple expansion or yield compression on real estate. I think the other side of it, and that's a global thing, I think is the cost of energy. The fall of oil prices may well have hurt Norway in the short term, but if you look at the bottom line when running real estate, so your NOI, that's improved by the lower cost of energy. And also in the Nordics, we've had now a couple of warmer winters, which also contribute to lower energy consumption. It also falls down to the bottom line. And then, as I said, the difference between expected GDP growth and interest rates is quite high in Sweden. So there is an expectancy then as a result, and I think that's possibly the only market at the moment where there is a credible sort of real growth in rents. So yes, there is a case for Stockholm or for Sweden as well. It's just you're playing with different sort of parameters than you would in some of the other countries.